What's going on YouTube? Mike here, back again with Renegade Forex, and in today's video I want to talk to you about the best 1-minute scalping strategy that you can use on any chart without any indicators. So if you find videos like this useful, be sure to subscribe to the channel and turn on notifications, and let's go ahead and get started. So today I want to break down this section of price action on AUD USD and talk a little bit about counter trend and how you can still gain very high reward trades trading counter trend to the higher time frame. Okay, so in order to do that, I need to back out and zoom out a little bit and explain to you where we're at in context so that you can understand how this is counter trend and why we don't need to know exactly what's going to happen next in order to capitalize on stuff like this. So if we zoom out on AUD USD, it's been pretty messy price action. Overall, we're in a swing down bearish trend on the daily. However, this is a pullback getting ready to happen on the 4-hour and the daily. And so in pullbacks, you get things like this where it wicks this high, then it wicks this low, then it comes back up and it wicks this high. And at this point in time, this is a pretty clear indication that this was going to be a failed higher high and that we were at least going to come back down into the discount of this zone, if not reverse and sell off lower. Okay, and that brings me kind of to this area on the 4-hour of consolidation where I've been trading the last couple of days. And if we drop down to the 15-minute, we can see here in this newly created range, we're at least pulling back into this demand zone right here. And there's a few things that could happen from here. Price could either obviously can do whatever it wants, but price, the expectation is that it's either going to come up and it's going to wick this high, causing a higher time frame change of character, and it's going to come back down, mitigate this low, and then continue on that overall higher time frame trend. Or obviously, it seems pretty silly to say, but it could also just continue this bearish trend down lower down into this range. Those are the two options that any chart can do at any point in time, but that's kind of where I'm leading myself to here, is that you don't necessarily need to know how far in advance price is going to do what. Like, I don't need to know what's going to happen tomorrow or the next day or anything like that. I can drop down to the super low time frames and pick and choose positions to take based on my expectation and the understanding of what's actually happening on this chart. Okay, so if we drop down to this actual chunk of price action from basically Sunday night up until today, up until the time of filming this video, we can see here we did have that sharp sell-off. We had a pullback. We had a little pause in price. Price comes up and wicks it, and then comes down and breaks this old low. So at this point in time, ignoring the rest of this, we would expect price would come back up and continue a bearish trend. However, from this point back up, it breaks this old high, which is then a swing breaker structure, runs up a little bit past it, rallies back down, a pretty sharp sell-off here, does not actually break this low. So at this point in time, the expectation is that price would come back up and clear this high. However, obviously it does not do that. It then sells off, wicks this low, small reaction, continuation to break this swing low back here. Okay. Now, at the time of filming this video, or just before filming this video, I was actually trading the New York session in this area here, and the way that I was interpreting this was liquidity being engineered by smart money and by big financial institutions. Okay, so if you're a retail trader, you may recognize this as some level of support, or perhaps you're a breakout trader or something trading right here, or you see this little wick and you're trying to get a breakout right there, whatever. This is all basically stop losses being engineered in the market so that retail traders come in and put them just below this area right here. So let me just define that really quick. So in this area here, this is all full of stop losses of people looking to buy the market back up, or pending orders that are of breakout traders looking to capture a trade like this that just runs down lower. Okay, so that being said, at this point in time, when I sit down to trade, I'm like, okay, it's pretty likely to me that price is going to run lower because all of these candles to move up that far, and then it takes like 3 candles to move down. So all this momentum right here to move down, and then all of this buying, it's like so many more candles, and you can just tell by looking at them that this is a lot this is very corrective. And then we have a sharp sell-off in like 3 candles. It moves all the way back down and then pull back up and break structure. And so at this point in time, when we get the break of structure, we then have newly defined swing range that we can expect price to trade back up into. And so right now, filming this video, obviously it's doing just that. And that's what I want to talk about, is capturing moves like this on the lower time frame that are counter trend, and that you can do without any indicators, that you can do very high reward and low risk trade setups in here. And there's actually quite a few. So let's go ahead and drop down to a lower time frame and break those down. So on the 5 minute, we can see a few things here. Let's go ahead and back up really quick just to kind of recap what we can see in this leg here. So price reacts off of this, quote unquote resistance, rallies up, mitigates the supply zone, continues, and breaks structure. But before we actually get the clean break in this candle right here from this old low, we do have a wick and a pullback and then a continuation. And so I myself actually took a loss right here, thinking that price was going to continue down. Price wicked up into this and then gave a 5 minute change of character right here. So I was looking to take a trade from here down lower. Obviously that did not happen. It did take a loss. And we can then see price continuing back up and looking to at least mitigate a higher level in the premium of this 15-minute leg, or reverse the overall trend to go with the higher time frames on the 4-hour. And so now let's go ahead and drop down. Actually, before we drop down, let's go ahead and just map out our price action here so we can understand a little bit better as to what's happening. So at this point in time, we have this 5 minute change of character, which you'll see in just a minute on the 1 minute chart. That's actually a run up and then a run down. But we have this high that causes a change of character. So we have this, let me back up, sorry. This change of character right here would indicate that it's likely price is going to come up and then continue down. When it does not come up, it then gives us a change of character back the other direction. And so we can then assume that at this point in time, it's pretty likely that the swing pullback is going to happen on the 5 minute and the 15-minute chart. Now, if you wanted to wait for more confirmation, you could wait for this little pause in price right here, which would be at the top of this candle. But since we have another candle right next to it, we'll make it this one here. I go over all these rules and all these fine details in my Smart Money Concepts Academy that I'm now accepting new students in. So if you want to learn, the finite details of what I'm talking about here, be sure to check that out. Otherwise, at this point in time, you could also, this would be a clearer confirmation of the actual swing pullback continuing, okay? So right here, we can see price runs back down, continues, and then it breaks this high right here at that point in time. Personally, I'm not waiting this long for a change of character. I'm just going to get rid of that. I'm also going to get rid of this to keep the charts nice and clean. We can then see from this high here, price pulls down into this demand zone and then it breaks that high. And we can then, from these points on, mark our what we call strong lows. Okay, so right here would be another strong low. Oops. So why do we call these strong lows? Well, they're lows that broke structure. That's it. So this broke structure, making it a protected low. We have a pullback that broke structure, making it a protected low. Now let's go ahead and mark up our demand zones. And as we do our analysis here, we'll drop down to the 1 minute time frame and we'll learn how to catch, counter trend scalps. So again, just to recap, we are trading counter trend what the 15-minute expectation is. This break of structure right here, this bearish break of structure implies that price is going to come back up, mitigate this, and then continue lower, printing lower highs and lower lows. And so let's go ahead and, like I said, mark up our demand zones here. We can see this demand zone that got a reaction. Obviously, it's not very clean. I'll refine that here in just a minute. We can then also see this demand zone here, which if you refined it to that, obviously price did not mitigate back into it. So for this, I'm going to use this example because I understand that all of this down move right here is a demand zone. So on a higher time frame, this would be a cleaner demand zone. Maybe it would just be one candle on the 15-minute. It just depends on where you're at in price. But we understand that essentially from this move up to this low right here is a demand zone. And then I'm just refining it to that candle. Now, if you refined it to this, you'd not be wrong. But obviously, if you had a pending order right here, price would have not have hit it. So that being said, for this example, we'll just use that zone there, or that candle there. And then once again, we have a 5-minute demand zone that's created right here, which is the last down move that broke structure. Okay. And so let's go ahead and drop down to the 1 minute now and get into the actual strategy of supply and demand using the 1 minute charts. And so right here at this first zone, you could have refined it to this here. And what happens? Price trades back into it and mitigates that demand zone, continues the trend to break structure. So there's a few ways you can get in here. And I'll go over basically what I do and then a few options at the end. So for me personally, I'd be setting a pending order right here and I'd just be targeting this high. I'm very aggressive when we're trading counter trend. In this example, it would have been basically a 1 to 3. And if you were triggered in right here, that would have been in, let's see, 1 hour and 18 minutes. So 78 1-minute candles. Obviously, that's pretty messy. That's a pretty long time to be holding a trade. Not really ideal, but definitely something that you can do. Next, after that break of structure, we have this 5-minute demand zone that was mitigated. We can see price pulls back into it. And in this example, we're going to get actually a confirmation entry. So if you're someone who wants extra confirmations, you can look for stuff like this. Basically, price runs down. We have a small pause in price action here. So on this right here, this is a little bounce, or in other words, a little pullback, and then a continuation. So this candle runs lower, causing this right here to be a pullback on the 1 minute. We then have a change of character when price in the future trades through that. So we have change of character, price comes back down, and what happens? It mitigates our demand zone, okay? So you could actually, again, if you refined it to this last down move before the up candle, you would have missed the trade. If you refined it to the candle right next to it, then you would have been triggered in. So at this point in time, it mitigates that demand zone. You'd have been triggered in right there. You could have had a 1 pip stop loss. For me, I like to leave a little bit more room and keep a minimum of 2 or maybe sometimes 2.5. But if you want that 1 pip stop loss, you could have had your stop loss right below that low. And then you could have targeted this high for a total of almost 1 to 5 gain. Yes, this is only 6 pips, but you're only risking 1 pip to lose it. So all in all, that is an almost 1 to 5 R gain. And then after that, what do we see? Well, we see price continue to run up into the premium of that high. So that brings me to the point where this is how you can catch higher reward trades. Now, if you're a new trader, wouldn't necessarily try to do this. I'd manage your trades pretty aggressively until you have this, mastery down of what to expect based on the higher time frames. But something you could do is you could look for the trigger like this, and then you could manage your trades up higher, like into these supply zones that you're expecting to be mitigated by the 15-minute. Or if for some reason you're expecting price to reverse, you can also then target that high and basically get the change of character on a higher time frame. Same with this trade here. You could hold it up into that supply zone, which obviously it's heading that way. This may take a while. This may not be until later tonight, or the middle of the night tonight, or tomorrow's New York session, but it's still the expectation that that would happen. And if you did something like that, you can see how the reward payouts differ greatly and how they then become much higher reward trades, only risking like 1 pip. So basically these 17 pip, 20 pip moves turn into really high risk to reward trades because you're risking such a little amount of your capital on that 1 pip, or you're basically only risking 1 unit to gain 13, 14 units. Okay, so I think that makes sense. Now, I'm not necessarily saying hold this that long. If you're not someone that can hold trades, then just target it right there and get that 1 to 5, get that 1 to 4, the consistent slow but sure gains like that. Okay, don't always be trying to hit home runs. If you're also someone who wants to hold to a predetermined risk to reward, so for example, if you just want to hold to a 1 to 8, you can do that as well. Now, the higher reward that you hold for, the less likely it is that it's going to happen. So that's why I always just target the next high, because that's a perfect point to, that's a perfect point to take profit. Price could just easily trade up into this high right here and then reverse and sell back off to continue back down lower. And you never know when that's going to happen. There's never a guarantee that it's going to come up here. And so for those reasons, I'm very aggressive, especially trading counter trend like this. But and that allows me to gain that, the consistent confidence in taking trades like this. And you can also do things like this. You can take, a big major partial at this high and then hold the rest of it just to see how long it goes. It's totally up to you. I talk a lot about trade management in my Renegade Forex Smart Money Concepts trading course, which I'd like to invite you to at least check out. There's links in the description below this video, and we go over super in depth how to trade just like this so that you can be in and out of trades in a couple of minutes a day if you want to spend that little of time trading. And if you only have time to just scalp at night or during the Asian session, you can do that as well. We have all sorts of trade plans that are catered to any type of trader, whether you're a swing trader or a 1 minute trader like this. So if that's something you're interested in, be sure to check the links in the description below. If you found this video useful, be sure to share it with one of your trading buddies. Also, be sure to subscribe to the channel and turn on notifications because I'm going to be doing videos just like this twice a week going forward until we get at least 1,000 or more subscribers on the channel. So if you're watching this way in the future and the channel has blown up and it has way more than that, be sure to drop a comment and let me know what you think at this point in time when you're watching it. Otherwise, thanks for watching and we'll see you in the next video.